morning, traders. Welcome to the TMT Stock Market Strategy video for Tuesday, February 16th. Well, we did get a nice little pop on Friday, and actually we got a nice little follow-through on Monday while we were closed here in the United States for President's Day. So we need to see if we're going to have this little rally sustainable. If it is sustainable, then we're actually should get a little bit of follow-through, get this retracement rally into some of these value areas, which I'll be pointing out this week if we continue to move higher, and possibly get into some good short trades. Now, obviously, things do change when these retracement rally happens, because it could be just a short covering rally, but then that could get fueled into a really big rally, and that would be something that I'd be interested in looking to short. I haven't seen anything that has changed. I am looking for a market bottom, I believe, sometime in March, April. So we're really close. Probably the next 4 to 6 weeks, I think that we would get a full-fledged market bottom and then a tradable low that we can actually start to trade. Now, a couple things. Obviously, crude oil is going to affect a market bottom, as it's been really getting decimated, and obviously the equity markets have been following suit. So we need to pay attention to that. Also, we do have seasonality builds that peak in crude oil. I mentioned that in sometime in March, April. That's also a sign that we might have a market bottom. Also, we want to look for that risk trade, right? That risk off trade, such as bonds, which bonds are coming in, 30-year bonds coming into a real heavy area of resistance right now. We want to pay attention to the VIX. I'll show you that as well. So there's some factors here that I like to see some stability. Now, in the overall indexes, markets have the two best times of the year, which is March and April, if you look at the Traders Almanac. So the seasonality, we are coming into some good, strong months. So that, to me, will tell me that I do believe that the markets will bottom sometime at those 2 months. I'm not exactly sure yet, but once we get into the March area, we'll obviously keep you posted on that. So WTI, let's take a look at that, 27.50. We're right back above it, but again, look at a lot of this overhead resistance here, guys. I wouldn't suspect too much follow through, at least not yet. Let's pay attention to what the Saudis and Russia, they did come up with an agreement early this morning, that kind of popped crude oil, and then it kind of sold back down again. But let's pay attention to it. $30 is a big area where we need to really see we're at work. It's trading at $30 now. That's a big area. It needs to get back above it and start trading above it, okay? So crude oil, pay attention to that. It's really important. Let's take a look at our McClellan oscillator telling us we're in a neutral state, which basically is probably correct. We're oversold. We did get a couple days of a bounce, so unwound a little bit at an oversold condition from down here. So now we have plenty of room to run to the upside before we even become overbought. All right, so let's pay attention to some of these indicators. Let me show you stocks above the 50-day moving average. As you can see here, we kind of double bottomed here, a little higher low from this previous low. It's a good sign, but still in these washout levels. So due for a decent sized bounce, I think, in the marketplace here. I don't think a bottom is in as of yet. Carving out bottoms and tops, it's a process, takes a little time. So we need to see how this materializes here. Okay, take a look at VIX, and this is another thing. Looking at risk on, risk off trade. Like I said, I like to see this thing hit 37.5, the VIX 40, and then look to see once we stabilize and we start to break down again. I do think at that time we should get a tradable low, or at least call a short-term low in the markets here, okay? Not until then. I do think that we'll chop around, and we'll have some good news and bad news, and that'll kind of gyrate the markets. But we really want a real big spike high of fear, and we haven't had that since, as you can see, August 24th. So I'm not saying it needs to be August 24th, but if we can get into this 36, 37 area here, that's going to entice me a little bit more, that we shuck out all of the weak longs, and now we're looking to get back into the long trade. At the moment, I'm just going to look to trade it as possible with a lot of protection, because market's a little crazy. But I do see some really fantastic opportunity coming in the next 4 to 6 weeks here. Okay, let's take a look at some of these indexes, and I wanted to show you the XLU. That's that risk off trade. Okay, we ripped right up. We basically consolidated above this big area of resistance of $46, which was support. Now we fell back in, and what we're doing here is just basically flagging. So I mean, right now we're flagging, right? We could actually actually it even looks like a bullish falling wedge pattern, where we would break back out, and then move higher again. But that's yet to be seen. If we do get a risk off trade in the markets, then we'll see this thing move higher again. But again, it's a decent pullback. That's the first pullback off of the breakout of the symmetrical triangle, which is logical. Should make a higher low from this previous low and then move higher yet one more time. So that's what I'm looking for to see. Look for clues that the markets have indeed bottomed. Okay. So let's go right into these indexes. I wanted to show you the weekly trade of the spiders. Now the weekly charts look terrible. Daily charts are kind of shaping up for a little bit of a dead cat bounce like I've been showing you. This is really going to be the 160, 170 area. It's going to be on the weekly target. These areas where I think that the markets may go to if indeed we lose this 180, well, let's call it 180, 182 area on the weekly chart. Okay. Take a look at the daily, Spiders daily, and you can see we had 3 days nice. We had Thursday, and then we had Thursday, Friday, and then we actually have Monday, which we followed through yesterday. So not bad. A 3-day move up from the oversold conditions off this 182.25, this value area, which we said that keep an eye on that. That's going to look to hold. And again, if you looked at these RSI, we are having a little bit of positive divergence here. You could see that clearly here. Okay, that's a decent positive divergence as the markets are moving lower. So now we need to really kind of break out of these areas here, kind of create a higher low, and then move higher from here. And then I think that we'll have a nice big push to the upside. Okay, but until then, I'm still calling this a little bit of a push the last couple of days suspect, where we get sellers come in and sell into it. Remember, there's a lot of longs that are trapped up in this area, this 2,000 area, or 200 in the spiders, if you will. All right, so once we get anywhere close, I do believe selling will start to happen again and push this market down at least one more time. That'll kind of put us right into that seasonal trade of March and April. Okay, now let's take a look at the IWM weekly. You could see horrible looking chart. We call that head and shoulders patterns months ago. 189.22 is going to be the target on this head and shoulders pattern. We're pretty much close to it, and we're only a few points away from Friday's trade. You could see how weak this is. And if you're talking about a risk-off trade, this is what you want to watch is the IWMs. If the IWM Russell 2000 ETF, if they can't catch a bid here, this rally will be suspect and will start to fail again. You can't have the markets rally without the participation of the transports, the Russell 2000, and banks and financials, along with technology. I mean, you just can't have that. Well, you're not going to have a lot of legs anyway in it. So we got back above this area of $94 here, as you can see. That's the area that we were watching. Resistance is still 97.50 here on the daily chart. And again, we're way, 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 way below that 20. So even if we get back to the 20, I think it should fail into that area again, or maybe overshoot it and then fail yet again. So again, guys, be cautious. I don't think the market is in, not even close that the bottom is in these indexes as of yet. You could see what do we have here. Look, you could call this a bear flag. I'm looking at this as a bear flag. I've been stating that all last week. I mean, clearly identifiable. I mean, if it gets back up into here, then it's just really an uptrend channel. But until then, let's see if the transports break today, if we catch a little bit of bid on that. But transports, again, really ugly. You can't have market rally, or at least have a substantial rally without these two key indexes, the Russell and the transports. Diamonds daily, nice big push up into the 200. And we're up nicely right now in the pre-market, up 175 Dow points in the future markets right now. So still very, very weak. You could see we still haven't broken back above the 20 since the start of the new year. So again, be careful out there, okay? Qs. Lastly is the Qs. We're back above that resistance of 97. Now we'll call that support. And again, guys, way, way below the 20. You could see, you could see we got a little bit of positive divergence here, but I mean, very rare. I don't see really anything much to even call that. But you could see we'll probably flag yet again and then call that a bear flag and then look one more low. We should really shake out all of the week longs, okay? So be careful out there. Let's see what happens. We've got a shortened week. We got 4 days left of trading. Should be really exciting. Watch what crude oil does. Again, pay attention to the transports, the IWM, the Russell 2000 ETF, or if you're looking at the futures, the TF. Really, really important to see that risk-on, risk-off trade. And I'm watching closely a lot of these safe haven trades, the REITs, the consumer staples, the utilities like I just showed you, and also the VIX. All right, you can really parlay that with a real nice pair trade with the VIX and the S&P. as you know, they're inversely correlated, so always ends up being a nice little trade, depending on what side you're looking for. All right. Have a great day, everybody. I'll talk to you tomorrow. Take care.